That's our Forex blog for March 6, 2015. And like I said, I will do one Forex blog a week just to update how the patterns are going. This is what I actually see. You'll just see the red and green arrows on the chart along with the trailing stops. I keep track of each pattern and ones that are failing, like the NR break 37 index. It tends to work less than 40% of the time. However, the wins, like you can see here, tend to be 25 to 50 pips. So I'm slowly phasing that out and trying to find additional patterns with a lot of the rules in there, with additional rules that are likely to work in the future. I keep stats of each pattern, and if I can't fix them, I eventually remove them. My goal is for every pattern to be at least 55–60% winning, with 1.5 times bigger wins and losses. Some patterns hit only 3 times a year, it seems. So a lot of the patterns have 20 to 50 rules in them. So if any of those 50 rules don't hit, there's no trade. There's close to 1,500 patterns in here now. Let me just showcase how I did in some of the currencies. Here you can see a nice 25 pip win, another 25 pip, 4 pip loss. There was no other trades, I don't think, in the euro dollar yesterday. Here's the stats for the week, and I'll showcase some more trades in the yesterday I did 334 pips, 56% winning. Absolutely huge win day. The average win most days is somewhere between 16 and 22, so it was an outstanding win. The average loss was also less than what average is. The smallest win that day was 9.2 pips. And you can see there's 25 trades in the 14 currencies that I track. The previous day, 320 pips, very high winning percentage. Again, much lower number of pips than the average win. Average loss was also wonderful. Day before, 216 pips, 70%. And this is what is more apt to be the case. 16 pip win, almost 10 pip average loss. This day, the winning percentage was much lower. However, the wins were also above average. And then on Sunday and Monday, very high winning percentage, very tiny average loss because there's only 2 of them. And again, like I showed you on there before, that NR break 37 index tends to lose a large percentage of the time. Most of the biggest losses most days, or the majority of the losses, come from this. I do not release this when I build it for our customers. I yank that particular pattern out because it's not good enough yet. So anytime you see these stats, this 9.1 pip loss would not show up in your version of the software. So you can see 2 losses on this day for 30 pips that subtract from the win. This would be 250 pips if those weren't in there. But I try to keep it real, and once I remove these, NR break 37 index, it tends to fail. But like you saw today, on Friday, when it does show up, it tends to be a big win. So I created a new pattern that had a few extra rules that when I do remove the NR break 37 index pattern, it will catch this particular trade with this pattern. So over the next few months, I'll hopefully catch the majority of the good ones, and I'll remove that pattern because it just tends to fail too much. Let's look at some of the other currencies.
Pound dollar.
Here's the pound dollar. And again, a lot of the stuff you see on the charts with the trend lines, and I have an intraday or intrabar Fibonacci levels that find some interesting trades that I can't find in a lot of different ways. Those are not going to show up on your software, but I didn't want to recompile it just to do a blog video today. You can see it found a nice little win here, a huge win right here from 13 all the way down to 68. Had a small loss right here. A nice 30 or 40 pip win here, and another huge win right here from 38 down to 90. Almost 40 pips.
Yen.
Here's the pound yen. Should load in a second. Small loss down here. This was a news related one. All my fast patterns happen when the market's going nuts. It was a small win. This can oftentimes, it doesn't hit very often, only during news events, but it tends to find a lot of 30 to 50 pip wins. So there's about 20 different categories of trades in the software. This new low right here was good for, over 20 pips. And then another 18 to 20 pip win right there. That's it for this Forex blog. Keep in mind that the ones we release just show the red and green arrows that don't have all this other stuff on there. And I have no intention on changing that. This is just for my own development reasons, but I use everything in here. Swing analysis, Fibonacci's, Fibonacci profit targets, Fib time extensions, Fib bar extensions, trend lines, Gann angles, wave counts, and all of our statistical tools. And I just this week added the perfect oscillator, which is another wonderful tool that finds some trend trades oftentimes before the market has really switched trend direction. It's a phenomenal tool, and over the next few months I hope to add a few hundred patterns that use that tool almost exclusively, because it is just a wonderful tool. I'll just add that to this chart real quick, perfect oscillator, and you can get a feel for how it works. For instance, the moving average of the perfect oscillator, when it's under the 0 level, signifies a pretty decent downtrend. So if the market swing analysis is lower and you get a pullback and this is right near the 0 level, it tends to revert back. Oftentimes you can spot double tops when the perfect oscillator shows divergence. Sometimes, let me put this on the euro dollar. Oftentimes the pound yen moves around so much or so many bars. This is actually using 5-minute data on a range chart. This is a perfect example of how I use it when I trade, and pretty much the reason why I created it. You see a nice little move like this, pull back to the 50 or 62% pullback, and the perfect oscillator is underneath the 0 level, which means the moving average, the bright white line. These are Bollinger Bands plotted around it. And basically, when the perfect oscillator hits the upper Bollinger Band, it's very likely to reverse, because you have a nice 31 pip move back, 50% pullback, anywhere from between here. This one kind of paused here and went up, down, showing the upwards momentum slowing. You can see it didn't explode up to that level, kind of worked its way, paused, worked its way, paused. It's very likely to resume its downtrend. And when I would be scalping or taking short-term trades with this, I would get short here, put my stop right here, so super tiny risk, have my Fibonacci profit targets as potential profits, and the real key to trading is just small risk, bigger likely reward. And in this case, this is what your initial risk was. Once the market moves your way, you move your stop down to break even or close to it. And in this instance, if you're using this tool, our system missed this trade, but I hope to, over the next few months, catch these kind of trades as well. You can make, in this case, 25 pips while risking 7. And that's just a phenomenal risk versus reward type trade. And oftentimes you can spot divergence in price versus my perfect oscillator. This is originally designed for discretionary traders who like to buy double bottoms or sell double tops and use it for additional confirmation on your trades. But for instance, let's say you wanted to get out of your trade and buy the Fibonacci profit target. Well, the fact that it's at the lower Bollinger Band right here, it's a more likely trade.